Hey, so I see this question a lot. How to use a mortgage, a doctor's mortgage at that, to buy investment properties? But I think the better question is, should I use a doctor's mortgage to acquire investment properties? I say no. Why would you? That product is designed specifically for a primary residence, and it's great for a physician that's looking to purchase or acquire, depending on where you're at in your career. It looks at your income a little bit differently. It removes the PMI requirement, which is private mortgage insurance, which can be costly. You can do that with a conventional loan where you're putting more than 20% down. So there's definitely some benefits to this on your primary residence. I know there's some other ways looking at duplexes and stuff on how you can get around this, but why try to beat the system? First of all, I'm not an accountant. I'm not an attorney. I'm not a certified financial advisor. But what I am is a real estate investor. And I've learned through my years of experience of looking for the right product, knowing what it is that I'm looking for to apply it the best. So let's take a look at this. When we're looking at a product here, I'm looking for something that's going to fit my needs. And I'm talking about single family residential investment properties. So it's likely that your current lender will not be the one that has the product that we're looking for. So here are some things I'm looking for. I want to own real estate in an LLC, not in my personal name. So that's going to automatically kick us out of a lot of the Fannie Mae and Freddie Mac boxes. So there's restrictions to that. How long I have to own the property, it's called seasoning. Whether if it is in an LLC, sometimes that big banks will say, hey, well, you've got to own this for 6 months and it's got to be titled this way, or 12 months. I don't want any of that. So I want to be able to own an LLC, and I want to be able to do it fast. I like, if you're looking at the BRRRR strategy, the buy, renovate, rent, and repeat process, refinance and repeat process, I don't want to be hung up on a timeline from the lender. So that helps me out in the seasoning process as well too. The LTV is also going to be something that I'm looking for. And I'm looking for the 80 to 90%. That's going to be focused on my cash flow, whatever I can do. I also want a lender who can provide purchase price plus repairs. And I don't want to be stuck in on only getting 80% of the purchase price, and then I've got to put 30 or 40,000 into it. I'm focused on finding these deals to give me the return I'm looking for, and only have about $20,000 to $25,000 in these deals. Certain markets will help us do that as well too. That PMI insurance, the product I'm looking for, I don't want anything to do with PMI. So no private mortgage insurance. That's going to help the lender out and not you. I remember when my wife and I purchased our first our residential home, our personal home, we made sure that we had that 20% down so we didn't have to pay the PMI. It's a big increase every month in the payments. You want to look for the amortization as well too. Some lenders, maybe your current lender, will offer a nice interest rate, but they're going to say, hey, well, I need 15-year amortization on this. And that's how long that note is stretched out. We're going to be looking for 30. You can even find 40-year amortizations as well too. That's going to squeeze our monthly payments down and allow us to have that arbitrage on top where we're collecting rents. And that's the cash flow that we're focused on. No prepayment penalties. Absolutely no prepayment penalties. See, so I've gone through the years of finding great deals and learning that, hey, you've got a 3-2-1 prepayment or a 5-4-3-2-1 prepayment penalty. And what that looks like is if I pay it off in the first year, I've got to pay 5 points. A point is 1% of the entire principal. So, and that goes down. The second year I'd have to pay 4, third year I'd have to pay 3, on down the line. Same way with the 3-2-1. I have to pay 3 points if I paid it off in the first year. So I'm looking for a product that has no prepayment penalties, absolutely none. And I also don't want to be limited on the number of loans that I can take too. So something great to keep in mind, because if I'm stacking these up, if I'm getting after it, I'm going to look at putting 12 properties together, or even 10, or even 6, or whatever you're looking at. I don't want to be limited on the product, the specifications of the product itself. The last thing I want to let you know is that broker beware. Every lender that's out there is not an actual lender. A lot of these brokers or hard money lender type of offers that you'll see will actually have points in a possibly percentage on top of of what the actual lender has. So you always want to go right to the source and get with the person who's actually lending to you. So where would you be able to find these? First of all, you have to know what you're looking for. And if you want to go to the website, we actually just finished writing a book. It's called How to Get Rich as a Doctor. There's a resource inside of that book, but I'll put in the description, I'll put the link to the website. It's physicianwealthsystems.com/book1/resources. There are going to be some great ways to find your market resources in there, whether it's lenders, property managers, real estate agents, all of that stuff. You can also go into the Facebook real estate investing groups, specifically the real estate investing groups, and you want to join those groups, and then you want to start asking who people are using, who the investors are using for lending. Don't ask for a lender. I think that's where the broker beware, because the sales people of the lenders, the brokers, are going to be all over that. So ask, see who is using which products and why they like it. Remember, success leaves clues. We're always going to work with the people who are experienced and are using particular vendors and contractors. Another great place is biggerpockets.com. I've found built some great relationships there as well too. You can always do a Google search too. So hopefully this is helpful. Using a doctor mortgage, again, it's great for your primary residence. It's not something that I would use for an investment property. I would find the product that I'm looking for specifically for me. In my scenario, it's a single family residential. I'm going to find a product that it's exactly what I need. They're out there. You have to know that they're out there. Don't get stuck inside of the box. Know what you're looking for. Don't be afraid to ask. And ask who you're working with already. They may already know. Thanks. Hopefully this brought you some value.